Apex Trading, one of the biggest prop shops in the business, recently changed some of their trading rules, and people have questions. I have all the answers, and I also have a solution. I'm Boris Schlossberg. Let's get into it. Before we start, however, everybody be sure to sign up for the free new newsletter called Prop Trader Edge. It covers everything in the prop industry, from news, new value propositions, strategies, and even psychological tips. All the information is in the comments below. So what are the new changes out of Apex that every trader should know about? Well, there are two primary rules that are very important to be aware of. First and foremost, Apex has instituted a new stop loss and take profit rule that cannot be more than 1, 2, 3, meaning that you cannot risk more than $3 per trade to win $1. That's a very, very negative expectancy anyways, but that is the limit of how they want you to trade. Now, there's a couple of things about that stop loss rule that are important to understand. First of all, they're not requiring you to have a physically hard stop loss on the position at every single trade you make. Although I'm going to argue that's an absolutely great idea and you should always have a stop loss attached and a target attached to your trade. But they're not requiring it to you. As long as it's a mental stop, they're okay with it because they're just simply going to review the account. But the reason why they're doing this, and they're actually making a very good point, is that if you're trading with a negative risk reward ratio at a 1 to 3, by the very definition of the mathematics there, you have to be 80% accurate just to be break even. That is more than enough room. That is far more ample room than you need in order to be able to succeed in a trade. If you're giving yourself more room than that, you're essentially gambling. And what they're looking for is consistent, hardcore traders, not gamblers. So instituting that rule, I think, is actually a very good idea to keep everyone in check. We've all can agree that having the rigorous rules that prop firms impose on us have actually made all of us much, much better traders in real life by having this kind of discipline and the kind of control that is imposed on our trading. Having a 1, 2, 3 stop loss is a very minimum, and I think it's a great idea, and now they put it into action, so everybody should be able to aware and take advantage of that. The second new rule they introduced has gotten a lot more commentary from traders, and the rule is this. They're discouraging you from dollar cost averaging into the position. Essentially, the new rules at Apex are that you're allowed to basically do a single additional buy at the exact same size. Let's say you are long 5 S&P contracts and the trade moves against you and you want to average in at a lower price. Well, you're allowed to have one more additional trade at the same size or less, 5 contracts or less, in order to be average and get a blended price. Now, people have really gotten upset about this because they constantly keep doing this trade of just bottoming out and averaging in, and then eventually hoping that the instrument rallies. And I understand that that's really been attractive, especially in a buy the freaking dip type of a environment we've had in the markets. But that is ultimately not a great strategy, because what that does is it inevitably leads to a martingale position where you're pyramiding down until you essentially run out of margin or run out of your conditions. And that's really what's bad about that practice. It feels very good in the short run, but in the long run, it's a very bad behavior. One of the great traders in the world, Paul Tudor Jones, used to have a sign behind his desk that said, "Losers average losers." And the longer I trade, the more I begin to believe that that is an absolutely correct way of trading. Listen, if you want to trade an instrument and it's going against you, the much more intelligent thing to do is to stop yourself out, regroup at the lower level, and come back into it with either the same or bigger size, depending on how strong you have the conviction. Doing that instead of carrying negative inventory, basically carrying dead weight and hoping that eventually the rising tide is going to rescue you, is a sucker proposition in the end. And Apex is looking for consistent traders that can make money consistently going forward, not just have a lucky break that rescues them. Ultimately, the act of dollar cost averaging in highly speculative instruments like the S&P or NASDAQ or oil or gold is basically an act of faith. And trading is a fact-based proposition. Now, fear not. Even though Apex introduced all these new rules, I have the perfect trading strategy that is fully in compliance with everything that they want, that has been producing profits for traders in my room all month long. As a matter of fact, some of the people who in my room have started to trade with me have never traded in their life, and they've been able to pass the Apex prop test literally using this one approach without ever having prior education in trading. So let's go to the screens and let's take a look at what we do every single day that is fully compliant with all the Apex rules and that really gets you towards that evaluation profit target. Hey guys, I'm going to share with you the very simple, very clean scalping strategy we use in our trading room every single day. Now, we trade this on a 1-minute chart, but you can trade it on a longer time frame, and you can trade it for larger targets than we do. We trade this on the NASDAQ, the S&P, the Dow, and the gold futures. And I'm going to show you exactly how we traded this in our room on the equity futures. The idea here is very simple. Here we have the 1-minute chart on the NASDAQ as you're looking at it. And essentially, the only thing we're looking at is the 8-period simple moving average. Because that's actually perfectly okay as a short-term moving average. It's not that there's anything special about the 8-period moving average, just it's a good value that tells us to be essentially on the right side of the trend when we are trading it. And the concept is very simple. I'm actually going to make the moving average a little bit thicker here for you so that you could see it better. Let me just make it thicker like this. Now you see the 8-period moving average. And the idea here is really easy. We are looking essentially for the slope of the 8-period moving average to be either upward or downward sloping. So if the slope is upward sloping, then it's a very simple process. We want the price to dip below the moving average and then come back up, but in a very specific way. Let me get bigger here so you can really see this in a micro fashion. So what we're looking for is the slope is positive, right? It's moving in an upward fashion. Then the price dips below the moving average, comes back up. And we are looking for the first candle that creates a higher low. Right over here, you can actually see this right over here. This candle creates a higher low. And you can see I enter on the close of that candle, Now, we trade this particular setup with a 1-to-2 risk-reward ratio, well within the Apex 1-to-3 parameters. So it's really only risking 1 to make 2. Some of the traders in the room actually use a 1-to-1 risk-reward ratio. It really depends on you. I like to use sort of a higher probability risk-reward ratio. In this case, we're using 5 target, 10 stop, because it's a very short-term scalping strategy. We do this over and over again throughout the day. So in this particular case, you can see we'll go long the NASDAQ over here at 1681 and come out at 1684.50. I think what happened here, sometimes when you're entering on a preset basis, for example, let me show you. If I go in here into the trading box, and I hit the order, and I hit the take profit and the stop loss, it's all preset for me. 5 points in the S&P is 20, in the NASDAQ is 20 pips, and 10 points is 40 pips. So my take profit and stop loss are all pre-marked. All I got to do is just hit the buy button whenever the condition sets up. And conversely, when I want to do a sell, same idea. It's already preset for me, and I have to hit the sell button when the setup sets up. Now, speaking of sell, let's take a look at exactly when my setup on the sell side happens. It's really the inverse. Here we have a negative slope, right? The slope is negative, and the price pops above the moving average, and we are looking for the first occurrence of a lower high. This high is lower than this one. Boom, right over here, and we're ready to go short. So we go short at 660 and pick it up here at 56.25, right? Get a little bit of slippage as you sometimes do, but it's still essentially plus 5 points to the downside. So this is a trade that we do in NASDAQ to the upside and to the downside. Also, of course, we've done trades in the Dow. Here's this was a classic trade in the Dow. You see upward slope, higher low over here, go long, boom. In the Dow, we're using a 10 target, 20 stop. And in the S&P, my favorite of all indices to trade, I'm using something very tight, 3/4 of a point of the S&P for a target and 1.5 point stop. So 0.75 against 1.5 stop. Here's the example of where I'm entering. Now, this is a really good, interesting example because you may be saying to yourself, hey, the slope is negative. That's not. What we're looking for is the slope prior to the price moving over below the moving average. Prior to below the moving average, the slope was positive. Now it just keeps making lower lows, lower lows, lower lows until it makes a higher low. This trade, perfect, gives us the perfect entry, takes us basically 3 minutes to come in, and boom, we're done, and the target is made. If you want to see exactly what we did as far as the trading goes, let me just get bigger here so you guys can actually see. It's very, very simple. Traded really for nothing more than 40 minutes today on the open. 40 minutes, 8:57 to 9:32, and 7 trades, no losers. No losers today by timing ourselves perfectly. The average winning trade took about 4 minutes to resolve, although many of them were a little bit less. And you can see it's a very efficient strategy. We did about $300 with only about $20 worth of commission. So less than 10% for commission. Expectancy was quite good. And you can see these are all the P&L accumulations that we had as the hour went on. Now imagine, this is only 45 minutes worth of price action. Imagine what you can do if you were trading for 2, 3, even 4 hours. Look how much pippage you could have gotten, how much P&L you could have gotten out of this strategy. And it's fully compliant. It's a 1 to 2 risk reward. You don't have to average down or average up. And it just adds until you hit your evaluation P&L. Hey guys, if you liked the video and you want to join me in trading every single day, be sure to click the link below for Pass the Prop Academy, and I'll be happy to have you in my trading room and teach you all the techniques that I just showed you in this video. And if you want to get a discount on Apex, absolutely hit the link below because the discounts are in the comments below and they're awesome. I wish you guys the best of luck and the best of trading. I'll see you in the markets. Boris Schlossberg, over and out.